Hey, welcome back. Since I haven't looked into AT&T in a while and I recently made an update for Verizon and the company had some announcements, let's see what they've been up to. They changed CEOs twice in about 3-4 years, with the recent one happening about a year ago. Now, they plan some new cost savings of over 2 billion, more investments in 5G and AI, so pretty much the same as before. I think the previous CEO actually did a great thing when he cut the dividend pretty much in half because, first of all, it was getting a bit out of hand. And now, after a couple of spin-offs, including one finishing in 2025, cost savings and so on, they seem to be in a very good position. If they want to, they can even increase it again. Plus, something that they just announced as I'm recording this, there will be some buybacks. You know, they could have kept it high and been the same slow dividend cash cow for ages, but at the same time, limited investments, no growth and so on, so this might have been the right call. With the recent investments, they expect over 18 billion in cash flow by 2027, which is very solid for the current market cap. They made about 20 billion a year ago, so this most likely means higher capex expected for a few years. Compared to Verizon, the current capex is still around 10-15% lower, but the cash flow is significantly higher. And keep in mind that AT&T is the slightly smaller one today. What's interesting is that AT&T makes about 10 billion less revenue and has, or at least had, a constantly higher interest expense than Verizon, but they seem to have a better margin. And don't get me wrong, for the, let's say, slow and boring type of business these companies are, they have amazing margins. Some 15-17% cash flow conversion rate in a high interest environment is amazing, and it's actually comparable to Google or Amazon. But sure, they don't spend the money on the kind of R&D that Google does, for example. By the way, the sale of DirecTV should lower the cash flow, and you can see them mention that in the presentations, but they'll get some good money which can cover the extra investments they plan. They are in a normal position for a telecom company, with the current assets below the current liabilities, but the cash flow covering the difference. Even if they have a lot of debt, there are a ton of assets to cover it, and it's spread until 2060. They have about 116 billion in equity on a roughly 160 billion market cap, so not bad. However, if you look at Verizon, they have less equity on a higher market cap. This is definitely another advantage for AT&T, and this company has actually managed to reduce the debt quite a bit. The recent spin-offs played a significant role in it, and I think Verizon could also look into something like that. All the cost savings, dividend cut and so on put the company in a much better position today, and we can see that reflected in the performance. They pay a dividend of around 4.7%, meaning about 8 billion per year after cutting it in half. They also announced 20 billion in buybacks by 2027, which is quite a significant roughly 12% yield. That's basically, depending on when you bought, a return of 9-10% per year, maybe even more. I bought this a year ago at like 15 and I basically have an 8% yield on cost today, 20% in total buybacks yield, plus already a profit of like 60%. This is why I was calling this type of company a very solid investment a year ago. But even now, it doesn't seem that bad. It's far from the best, but in certain portfolios, it can offer what it's supposed to offer. The potential, as we can see from their investments, would come from higher demand from AI. It wouldn't add a huge amount of money, but any growth above inflation should be pretty good for a company like this. Again, they are very slow, and even a slight increase in the base cash flow can result in significant improvements. Now, probably even more potential, both for the company and the stock, would come from rate cuts. This can be great because it would lower the interest and allow the company to refinance at better rates and have more money available for investments or whatever they want. Plus, this leads to a fall in treasury yields, making dividend stocks more attractive for the market. When you say AT&T, you say dividends even after it was cut. The risks are the same as the ones I mentioned for Verizon. You can have something like the lead cables issue that by the time we find out about it, the stock is already crashing and it can cost the company billions. Or anything related to the safety of data, potential corruption and other scandals. We see way too many data breaches and stolen information from these companies, and eventually it might get to a point where the regulators say Eventually, that's enough, fine them and force them to invest in proper protection. If this happens in the EU, especially since GDPR, companies face up to 4% of global annual revenue in fines if they fail to protect the data. These two would probably go bankrupt by this time if they were European. But this is politics, which is unpredictable and can always change. Now let's see a valuation. In a bad scenario, let's say they drop to 15 billion, so around a third less than today. This can happen especially if they get some big fine or have to invest even more than expected. Assuming a ratio of 8, that's a market cap of 120 billion, meaning a price of 16.75, so the same as they were a year ago. That's a drop of around 30%. But in this scenario, the dividend is more than okay, they can do buybacks, repay a lot of debt, so they would still be in a very good position. Not only that, but the yield on cost would actually make it very attractive. I was calling this a strong buy a year ago and it nearly doubled from that level. I'd actually love to see it fall back to that price. In a second scenario, let's say they get to the 18 billion they target, which is again less than today. Assume a ratio of 10 and that's a market cap of 180 billion, meaning a price of 25.14, so around the current level. Again, in this scenario, they'd have about 10 billion for buybacks and early debt repayments after paying the dividend, so they can really do a lot. I think paying the debt would be the best option because it would also lower the interest and increase the cash flow. Do this for let's say half a decade and this company can be significantly better and much more attractive for the market. In a better scenario, with debt repayments for half a decade lowering the interest on top of rate cuts, let's say they can make 22 billion per year. For a ratio of 12, which might be low given how attractive this would be then, that's a market cap of 264 billion. That would be a price of 36.87, meaning a 50-60% profit plus the dividend. They could easily double the dividend at that point and still have a lot of money for buybacks and debt repayments. However, that's if they want to do it. From the looks of it, they just focus on giving everything back to the shareholders now instead of significantly improving the company's future. As they say, the dividends and buybacks will be the priority in capital allocation at least until 2027. But that's after some investments, so not terrible, and they can definitely improve after the current investment cycle. Overall, I like AT&T and I'd say they are better than Verizon. I think the recent CEO change and all the actions he took were quite beneficial for AT&T. This makes me think if maybe Intel could also follow now that the CEO quit. Anyway, they are now in a position to pay much better dividends if they want to, so this has potential to attract even more people, especially with rate cuts. I have some AT&T and Verizon, but if you look into it, other companies like Vodafone, which I looked into recently, could be significantly better. Check out this video if you're interested, and thank you for watching. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching and I'll see you next time.